Real Estate Intelligence Daily, PropTech, Finance, and Commercial Market Insights, June 16, 2026. Tech innovations fuel property's journey to new frontiers. Disclaimer: this forward-dated report is for informational purposes only. It does not constitute legal, financial, medical, or official advice. All content presented here is news and analysis, not guidance. Please consult professional advisors for personalized advice. Remember, news is news. Anecdotal stories and commentary should not be treated as instructions or personal recommendations. Commercial real estate finance. The commercial real estate (CRE) finance landscape remains a study in contrasts, with abundant liquidity on one hand and cautious underwriting on the other. Interest rates have stayed elevated, challenging deal economics, yet lenders are showing strong appetite for high-quality transactions. In fact, competition among lenders recently hit record levels. JLL's April 2026 Credit Availability Index reached an all-time high, reflecting a near-record number of banks, private credit funds, insurers, and agencies actively quoting new loans. Loan-to-value ratios are nudging upward as financiers vie for limited deals, even as equity investors remain selective due to higher yields. The result is narrower lending spreads, but also an emphasis on conservative terms in an unpredictable rate environment. Altus Group. Optimism in CRE capital markets is tempered by realism. At the mid-June 2026 CRE Finance Council (CREFC) conference, industry leaders agreed that future value gains must come from property income growth and operational improvements rather than from the easy cap rate compression of prior years. Rising interest costs have ended the era of cheap leverage, so fundamentals like occupancy and rental growth are back at center stage. Refinancing of maturing loans is a top priority, especially for sectors under pressure. Office buildings remain a headwind. They're now the main contributor to rising commercial mortgage delinquencies, as landlords grapple with higher vacancies and expensive refinancing. Lenders are responding by demanding stronger borrowers and higher debt service coverage. Some complex loan workouts are emerging, splitting loans into A, B tranches or extending maturities to manage defaults and buy time for asset repositioning. Despite these challenges, well-capitalized players with prime assets are finding financing, signaling that good deals can still get done even in a more disciplined environment. Altus Group. Remarkably, overall lending volume has expanded, defying expectations of a credit crunch. Banks and private lenders have combined forces in new ways. Banks are partnering with debt funds and private credit providers to co-fund projects, effectively expanding the total lending universe available for real estate deals. Data underscores this trend. Banks originated approximately $455 billion in commercial real estate loans in Q1 2026, up 80% year-over-year, and private credit lending surged even faster, by 133% over the same period. This synergy has contributed to a 52% annual increase in overall commercial and multifamily borrowing, supporting new investments and even fueling new construction starts, up over 23% year-on-year in recent months. Perhaps surprising to many, distressed sales have remained quite low, peaking at 3% of deals last year, far below the 20% seen after the global financial crisis. This expanding capital ecosystem is a hopeful signal for the industry. It shows that creative financing and collaboration are helping to bridge funding gaps, sustaining real estate projects through turbulent times. Even under higher rates and economic uncertainties, the resilience and adaptive innovation in CRE finance suggests the sector is finding new orbits of opportunity. Commercial Observer. +1. Commercial Observer. PropTech and AI Analytics. The property technology, PropTech, and AI analytics segment of the real estate industry is surging forward at light speed. After a few cautious years, venture capital is flowing back into real estate tech companies, especially those with AI in their pedigree. In 2025, PropTech investment rebounded strongly to about $16 billion raised, a 68% jump from the previous year, with AI-driven startups capturing a growing share of that funding. By 2026, no longer is technology adoption optional. For many real estate owners and investors, digital solutions are now core infrastructure rather than experiments. From smart building sensors to advanced data analytics and predictive models, technology is being woven into almost every facet of real estate. By some estimates, over 70% of large commercial property portfolios are now equipped with smart building systems to optimize operations and energy use. This mainstreaming of PropTech reflects a strong, adapt or be left behind mindset. For real estate professionals, whether brokers, asset managers, or facility operators, AI-enhanced tools promise a quantum leap in efficiency and insight, enabling quicker decision-making. The ethos is decidedly optimistic. If the industry can harness data and automation effectively, it will become more transparent, efficient, and attuned to the needs of people, from tenants to investors, much like a spacecraft navigating with ever more precise guidance systems. Home Business Mag. High-profile AI integrations are making headlines as they shake up traditional real estate workflows. Zillow's new ChatGPT-enabled search tool is one standout example. The home listing giant this quarter launched the first real estate app within OpenAI's ChatGPT platform, letting users conduct conversational home searches and view listings via AI. Early adoption is promising. Zillow reported an 18% jump in revenue year-on-year in a mostly flat housing market, partly credited to its AI-driven features and improved user engagement. The move has drawn both enthusiasm and scrutiny. It highlights how AI is transforming consumer experience, enabling seamless, personalized home hunting. Yet it's also prompting industry debate about data usage rights and the proper governance of AI's role in real estate transactions. Meanwhile, major brokerages and property firms are racing to embed AI across their operations, from lead generation and tenant screening to automated property valuations. PropTech's AI revolution isn't just about startups. Legacy real estate players are building their own AI capabilities, concerned about being left behind in this new frontier. In a pioneering shift, mega investors like Blackstone and Brookfield are backing multi-billion-dollar AI ventures to develop customized in-house tools for underwriting, portfolio management, and asset operations. These giants are leveraging their troves of proprietary data to create bespoke AI systems tailored to real estate, which they believe can deliver competitive advantage and render generic solutions obsolete. This trend signals that the next phase of PropTech may revolve around empowerment via massive data and AI, a kind of arms race reminiscent of exploring uncharted territory. MSN. Credaily. +1. As AI analytics become more sophisticated, PropTech firms are carefully positioning themselves to remain indispensable. Established CRE tech platforms like DealPath and Crexi have quickly rolled out AI-enhanced features to work alongside large language models, emphasizing their role as trusted data stewards and workflow integrators for the industry. This approach banks on their deep data relationships and compliance infrastructure, which are not easily replicated, even as general-purpose AI becomes ubiquitous. The overall promise of AI and PropTech is transformational. Tasks like property research, market analysis, and underwriting that once took weeks of human effort can now be completed in minutes or even seconds, leveling the playing field for smaller players and savvier consumers. The industry's futurist mindset, including visions of algorithmic market forecasting, AR/VR property tours, and blockchain-secured transactions, suggests real estate is on a trajectory for space-age innovation. All of this is underpinned by a people-centric outlook. The ultimate goal is to reduce friction and expand access, be it by enabling smoother transactions or by generating actionable insights that help families and businesses find the spaces they need in a dynamic world. Credaily. Business Wire. Construction and development tech. The world of construction and development technology is undergoing a renaissance as the industry leaps into an era of automation, smart materials, and space-inspired methods. Facing chronic labor shortages and rising costs, builders are embracing cutting-edge solutions to speed up projects and improve efficiency. Robotics and AI are increasingly taking on heavy lifting, literally, at construction sites. In a sign of the times, A 2-year-old startup called Bedrock Robotics just secured nearly $300 million in funding, led by Alphabet's Capital G and NVIDIA, to automate heavy construction equipment, valuing the firm at $1.75 billion. Bedrock's technology equips excavators and other machinery with sensors and AI, enabling them to operate autonomously around the clock on tasks like site excavation, akin to self-driving vehicles for construction. These kinds of innovations promise to shorten project timelines and cut costs, particularly for labor-intensive developments such as data centers and large-scale housing communities. Though fully autonomous building is still in its early days, current systems require some human oversight. The trajectory is clear. Industry observers note parallels to the evolution of autonomous vehicles. As robots learn from human operators and technology matures, 24/7 construction by machine is becoming a plausible reality. Meanwhile, 3D printing in construction has graduated from novelty to real-world deployment. What started as a futurist concept is now being put to work on Earth to tackle housing shortages. In Texas, fully 3D printed homes are already being built and sold in actual neighborhoods, not just in pilot projects. Large-scale concrete printers can now erect the walls of a house in a fraction of the time traditional methods require, effectively replacing the time-consuming framing process with an automated layering of concrete. Supporters of these techniques tout multiple benefits beyond speed. 3D printed houses are energy efficient, disaster resilient, and potentially more affordable, addressing critical pain points in today's housing market. Early residents of these futuristic homes cite the thick, solid concrete walls as exceptionally sturdy and resistant to pests and weather, giving a greater sense of security and longevity. The technology is also unlocking new architectural possibilities as curved and unconventional shapes become feasible without extra cost. As demand for housing continues to outstrip supply in many regions, builders are turning to such alternative construction methods to add supply faster and lower costs. Government and industry stakeholders are watching closely, as what works in Austin could scale up nationally to help ease affordability crises in other markets. Fox Business. The future of construction tech is looking truly stratospheric, quite literally. The innovations being honed on Earth today have cosmic potential for tomorrow. In a striking overlap of real estate development and space exploration, NASA has partnered with a Texas-based 3D building company, Icon, to pioneer 3D printed housing on the moon as part of the Artemis mission, aiming for operational lunar habitats by 2040. Space agencies and architects are treating remote extraterrestrial bases as an extreme testbed for new construction techniques, from autonomous robots to regolith-based concrete. These efforts underscore how advancements in construction technology can benefit humanity not only here at home by producing housing more efficiently, but also by paving the way for outposts beyond Earth. Back on the ground, construction and development tech is steadily reinventing the industry with a people-first mindset. The goal is to build safer, greener, faster structures that better meet human needs, providing affordable homes and resilient infrastructure fit for the future, whether on our own planet or one day on a new world. Insurance and risk management. A perfect storm of rising risks has thrust insurance and risk management into the spotlight in real estate. Climate change in particular is reshaping how properties are insured and financed. In states like California, intensifying wildfire seasons and soaring rebuilding costs have forced major insurers to pull back. Industry giants such as State Farm, Allstate, and AIG have largely stopped writing new homeowner policies in high-risk parts of California, and they have sought double-digit rate increases on existing policies. This retreat stems from mounting catastrophe losses and regulatory constraints that prevented timely premium adjustments. California regulators are scrambling to keep the insurance market stable. Recent state rules now require insurers to take on more customers in wildfire zones and let them pass on their higher reinsurance costs to policyholders, a trade-off aimed at preventing a full-blown coverage crisis. The stakes are high. Without viable insurance, real estate transactions stall and communities can't rebuild after disasters. These developments highlight the crucial importance of risk management in real estate, ensuring the sector can weather environmental volatility while providing property owners some certainty. Insurance. Plus one. There are also glimmers of hope in the insurance landscape. In Florida, after years of hurricane-driven turbulence in the market, a series of state reforms and a bit of luck have begun to stabilize home insurance costs. Reforms enacted in recent years to curb lawsuit abuse and bolster private insurers' solvency are showing results, with industry analysts calling Florida's property insurance market the healthiest it's been in 5 years. Multiple insurers, including even State Farm, are now filing for rate decreases for 2026, some proposing premium cuts in the 8 to 12% range. The state's once bloated insurer of last resort, Citizens Property Insurance, has even proposed its first average rate reduction since 2015. This dramatic reversal comes as clearer weather data and anti-fraud measures have eased the pressure on carriers, allowing them to lower prices in some regions. It's a rare bit of good news for homeowners' wallets and a template for other markets struggling with runaway insurance costs. The lesson: proactive policy changes and robust risk sharing can rejuvenate an ailing insurance market, helping keep coverage available and affordable for property owners in vulnerable regions. MyNews 13. MyNews 13. Plus one. Innovation is also transforming the way the real estate industry manages risk. Sophisticated data analytics and modeling tools are enabling investors and insurers to incorporate physical climate risk into asset valuations and underwriting much more rigorously. Major insurers and reinsurers, in partnership with real estate firms, are rolling out platforms like Location Risk Intelligence that map future flood, storm, and heat exposure for individual properties. These insights help identify resilience measures and influence premiums and lending terms. A resilient building today is likely to be a quality asset in tomorrow's climate-stressed world. Collaboration between insurers, lenders, and developers is growing, with all parties recognizing that improving disaster resilience, from fortified roofs to citywide flood defenses, benefits both society and their bottom lines. As climate resilience becomes a competitive advantage for cities and buildings, insurance products are expected to evolve too, from parametric policies that pay out immediately after disasters, to new coverages for climate retrofitting and green insurance incentives for sustainable buildings. The big picture is one of adaptation and forward planning. By using cutting-edge risk management tools and working as a unified front, the real estate industry is steering toward a future where communities can better withstand the forces of nature, much like a well-engineered spaceship navigating cosmic storms. Municher. Plus one. Real estate investment platforms. The rise of online real estate investment platforms is revolutionizing how people invest in property, injecting a futurist, democratizing element into what was once an exclusive asset class. Over the past decade, dozens of digital platforms have emerged to crowdsource capital for real estate projects, allowing individuals to become fractional owners of properties with as little as a $10 or $100 contribution. This crowdfunding model, authorized by regulatory changes in the 2010s, has opened commercial and residential real estate deals to everyday investors who otherwise might never have access. By June 2026, the largest platform, Fundrise, boasts over 2 million users and $3+ billion in assets under management, signaling that small investors' appetite for real estate exposure remains robust. These platforms pool capital from thousands of users to finance apartment buildings, new housing developments, and loans, packaging the returns back to participants as either passive income distributions or long-term appreciation. Amid economic uncertainty and stock market volatility, many investors see these alternative platforms as a way to diversify portfolios and potentially earn steady yields linked to real assets, thereby bridging the gap between Main Street and high-end real estate investing. Home Business Mag. Plus one. Business Wire. In 2026, real estate investment platforms are expanding their offerings and capabilities. Some have launched interval funds or private REITs to provide more liquidity and diversification, while others now offer fixed income products, like real estate debt funds, to meet investors' demand for income in a higher interest rate environment. Technology is at the heart of this growth. Leading platforms use sophisticated data analytics to source deals and manage portfolios at scale. In a notable move, Fundrise recently debuted RealAI, an AI-powered real estate analysis tool billed as the ChatGPT for real estate. RealAI taps trillions of data points and Fundrise's own database to evaluate properties and markets in seconds, providing institutional-grade insights to any investor with an account. This leap in analytics, making near-instant underwriting and market forecasts accessible to the masses, underscores the broader vision of these platforms to democratize real estate investment through cutting-edge tech. At the same time, longtime real estate investors caution that rigorous due diligence remains vital. The best platforms have responded by strengthening their sponsor vetting processes and compliance measures in the wake of early growing pains in the sector. With improved transparency and oversight, investor trust is growing. Business Wire. The future of real estate investment platforms appears bright, if still evolving. Industry analysts predict continued growth in user adoption and capital flows as more investors seek out property exposure outside the traditional stock market. These platforms also face competitive pressure from Wall Street incumbents and the public markets. For instance, some investors are comparing the merits of crowdfunding versus public REITs in terms of risk, liquidity, and returns, highlighting the need for education and transparency in this space. Yet the people-centric promise of online property investing, giving individuals direct stakes in local developments or national portfolios, resonates strongly in an era of financial democratization. Many platforms emphasize their mission to lower barriers and let anyone be a real estate investor, which aligns with the broader trend of inclusive finance. Looking ahead, we may see convergence. Traditional real estate asset managers entering the online platform arena and the integration of new technologies, like blockchain tokenization, to enable global participation and liquidity in property investment. For now, real estate investment platforms are an example of innovation meeting opportunity, harnessing technology to connect capital with communities and projects, all while giving more people a chance to participate in the wealth-building potential of real estate. This open frontier of investing is still being charted, but it holds hope for empowering individuals and fueling growth in the real estate space. Forbes. +1. Video description for YouTube in Real Estate Intelligence Daily, June 16, 2026. We explore 5 critical trends reshaping the property world. From commercial real estate finance adapting to high-rate headwinds with creative lending, to the PropTech and AI revolution transforming how properties are analyzed and experienced. We delve into construction tech breakthroughs like 3D printed homes and robotics speeding up building projects, and examine insurance challenges and innovations amid climate risks and regulatory shifts. Finally, we spotlight real estate investment platforms opening up property markets to everyday investors. Join us as we journey through an optimistic, tech-driven vision of real estate's future, from resilient cities on Earth to bold dreams reaching for the stars. Video tags: real estate, commercial real estate finance, PropTech, AI in real estate, smart buildings, artificial intelligence, real estate analytics, construction technology, 3D printed homes, robotics. PropTech Trends 2026, climate risk, insurance and real estate crowdfunding, real estate investment platforms, fintech, future of real estate, space tech, space colony, real estate news, market insights. Base thumbnail concept: a futuristic city skyline blended with digital elements. The bottom half shows modern skyscrapers and construction cranes on Earth, while the top half transitions into a starry night with a rocket launch and a glowing moon colony outline. Bold text overlays the image. Real Estate Intelligence Daily, June 16, 2026, with a subheading: Tech and Finance Transforming Properties on Earth and Beyond. The overall look is dynamic and optimistic, with blue and gold tones suggesting innovation and opportunity. Thumbnail variant A: an upward view of a glass skyscraper covered in digital data streams and AI